Good morning. Welcome to Boardroom Media. We're joined once again by Peter McGuire, the CEO of XM, for the XM.com weekly market update. Pete, good morning.
Good morning, Andrew.
Plenty going on.
That's an understatement, my friend.
Huge amount of economic activity, sentiment changing, particularly last week. It was all, you would sort of say, positive.
Yep. It's
turned in the last few days, particularly on the equity markets in the States.
Absolutely.
So let's try and unwrap all this. So
Sure.
Once again, we'll start domestically.
Yep.
We've talked about the Aussie labour market before, still very strong. The economy's holding up reasonably well compared to a lot of other world economies, if you like.
Yes.
So, but yeah, those numbers tell the story.
I think they do, and there's no doubt, as we've mentioned many week on week, if you want a job in Australia, you'll get a job. If you want a pay rise, you may not get a pay rise, but you'll certainly get a job. And inflation seems to be a laggard here in the sense of what we're experiencing across the globe. We're well and truly under where some of these major economies are running, UK and Europe, and certainly the States. So are we going to be heading much higher as we play catch-up? Going to be an interesting last couple of quarters.
It certainly will be. And obviously with the Aussie CPI data only coming out quarterly,
it
probably doesn't get as much focus as what it does offshore because of the monthly figures. But
yes.
And we've seen obviously the change in the Aussie dollar there.
Yeah.
When we were speaking last week, it was close to 71.
Yeah,
now it's sub 69.
Yeah, strongly bid up, and we thought, right, we're off to the races, but actually King Dollar has just been awesome, and the old Aussie has got crushed, and so has China.
Certainly has. Now, moving offshore, we haven't touched on Japan a lot in recent weeks, so we'll have a look at a few slides here.
Yeah.
Inflation creeping up. It came out last week at 2.4%, which is only slightly up on last time, but still fairly flat in the whole scheme of things.
Yeah, and the trade-off, I think from a positive point as far as where Japan's played, they've let their currency be created, currently trading at about 137.40. So it's just been wiped out, the old yen, and is 145 the new target that we're marching towards. Inflation ticking up, as you mentioned. Who could imagine even Japan getting to 2.3%? It's unheard of, but it seems to be ratcheting up there also.
It certainly is. So, and if we look at the next slide there, that's obviously the yen. It was improving a little bit, but certainly turned again in the last week or so.
Well, the early part of March and where we played after Christmas, and seems to be, between that 110, 115 from Christmas all the way through to March, everyone thought, well, what's going to happen with King Dollar? How's everything looking? Well, since then, that story tells a big story, 115 to nearly 140, and that's a major economy. I mean, there was the second largest economy in the world at one stage, now at number 3. So if that can happen to a major economy, what happens to some of those little economies?
Well, it just goes to show it can happen anywhere, doesn't it?
Yeah.
The UK. Now, we've got a few slides here. None of them are that great. The inflation is now over 10% with the numbers that have come out last week.
Yeah.
You look at retail sales there, and it's a pretty...
Cratered.
It's not a great looking chart.
No, it's certainly not. I made some notes. We've done a fair bit of media in the last 48 hours, and when you're looking at that 10 plus number for UK sales and what we've got expecting this week as far as a data release, and the horrific what I saw yesterday, they're saying it could be at 18.3% by January. That is just frightening. And look at the trajectory, and where would PMIs be and retail sales and all of those core issues moving forward. And we're not reliant on Russian gas, but it certainly plays a big part as far as energy consumption in the price of what goods are. And I just thought I'd just share this with you. Going back probably 3 to 4 months ago, it was €40 a megawatt hour. €40. If they've now, you buy it with a year forward, we're now sitting at €570. So what it's costing, and we're in summer now, and we've got a 500-year drought in Germany to cool down those homes from air conditioning, but what's it going to be like in winter? It's going to be a very interesting, as I said, the next 2 to 3 quarters.
Very much so. And that's true. Going into the
European winter.
The European winter as well, and the US winter as well. So
Oh, yeah.
now, another chart which isn't great for the UK. This is over a 12-month period, but
Sure.
we did have that spike late last year, early this year, but it's those numbers aren't too flashy.
Well, it looks a lot like '08. And what we've seen also is your 2-year and 10-year, that we're now going back to 2008. So, you know, the cost of money, you're 10 years under your 2-year. It is pretty, again, another frightening,
Yes.
when you're looking at those data points that give you I think a sense and feel and sentiment moving forward. It's a bit of gloom and doom out there, mate.
Certainly is. What do they say? History doesn't repeat, but it rhymes. I
Yeah,
think
it
is
does,
the saying. So, but
Should be
who
a good
knows?
song. You and I think we need to do a karaoke.
The British pound, same again, same
Yeah.
story.
You know, again, March, have a look where it was. It was 135. We were approaching that 140 at Christmas, and the pound was looking fairly strong. We're now at 118, and it seems to be cratered. The US dollar is it's nearly at 109, that US dollar index. What we've seen in the last week has been dramatic for a currency trader. So are we heading to 115? It's been a long time since then. I've even heard, you know, we could be at 110 by the best part of October. So that's what traders are hearing. I love the chatter as far as the meme stocks, and there's a lot of people out there that are very invested in these markets. And, you know, when you're thinking of what they've done, the Bed Bath last week, $30 down to $10, the currencies, the chatter out there is, you know, is 110 the new handle and the new home for the pound.
Time will tell, but you would think 115 would get tested.
Oh, yeah.
In the near term.
Yeah, very much so.
Time
I wouldn't
will
be
tell.
surprised if it's out there by, you know, sometime mid-September. Because we've got Jackson Hole this week.
Correct.
Symposium, and what's going to be the comment there from those 5? We've got Philadelphia talking, the old dean of Wharton School, Pat Harker, he's talking. You've got Kansas, you've got a couple of the other states, and that's a wonderful consensus across US Main Street, how each state is feeling. And then you've got, of course, Fed Chair Powell and what the rhetoric's going to be. Are we looking at that 75? How do we handle inflation? What are the storylines going forward? So we're all sitting on the edge of our seat, and, you know, I'm a proud reader of the old Financial Times, and it just gives you a great insight as far as what the rumblings are across Wall Street and Main Street.
And it'll be interesting, seeing there's not an official Fed meeting this month.
Exactly.
Will they still put rates up?
Yeah, well, I tell you what, if they did, it'd really hit everyone between the eyes. That could be the surprise.
Is that the message they want to send as well? They really want to sort of nip inflation in the bud, but we'll find that out in a few weeks' time.
We certainly will.
Lastly, I thought we'd spend just a little bit of time looking at the earnings season. It's not quite over yet in the US,
No.
but the majority have come out.
reported.
Pretty good overall.
Yeah.
Most have either met or exceeded expectations,
Yes.
and the market was probably thinking this was the quarter that was probably going to get hit by the higher interest rates, but
Yep.
maybe not yet.
Maybe not yet. If you're looking at Germany, and I use that as a mature economy, and what's happening there, and China with the cost of energy, and what's happened, you know, as far as manufacturing plants, supply chains, and the interruption to business models, and they're now saying that the German car industry is just going to crater. So could this be the first start of this as it rolls through to something like the US? And you've got to look at the health of Main Street to be a consumer, to buy a lot of those goods and services that these companies are offering. So we've spoken about it 100 times, your wonderful history at the ASX, it's all about backward and what we're looking in the vision mirror. But unfortunately, as many good wisdom providers have told me, when you're driving the car, the windscreen is 100 times bigger than the vision mirror. So we're going to look forward, and it's going to be interesting again, October and November, how these are performing.
Yeah, and that might be the true test.
Yeah.
We look at the US equity markets as well. There's always that, I guess, that stigma around the month of September.
Yes.
It's probably being one of the worst months each year,
Good
rightly
song.
or wrongly, but it is that's coming up as well.
We're not far from it, mate.
No,
A
not
week
at all.
away.
Yes, and we touched on this, we've spoken a little bit about in the past, with the current rally in this market.
Yeah.
There was plenty of shorts out there betting the market would continue to go lower.
Sure.
And they can only take so much pain
Oh.
before they have to
Liquidate.
unwind those positions. So
Yep.
has that been one of the main catalysts of this rally recently?
Well, if you listen, two things on that, or three things. First off, it's a $7 trillion worth of value has been added to the stock market since June. Well, that's 2 months. So that's a fair bit of value, I thought, trillion with a T. Second point, the unwinding, as you mentioned, as far as all of those hedge funds. So if you haven't got the same appetite for the longs entering the market, then, and that's what they're saying, that they're we're talking about the big prime brokers. That's their commentary. You're hearing these guys on the desk. The longs aren't engaged. So maybe the Connecticut summer's too inviting and you're all swimming off the bay there. So at the present time, it's a very sick market, and let's just see what happens.
Yeah. Well, once again, we might see that pullback in the coming months, and whether or not they retest the lows back in June, where the 10-year Treasury was up around that 3.3.
Yeah, I think it was 3.28, 3.3.
Yeah, thereabouts. Who knows if we get back to those levels? But I suspect, it could be a bit of a bumpy road in the next few weeks.
I would say so, my friend. And so, we're seeing all the data. We've got a heap of data this week. You've got all the PMIs coming out of Europe, UK. We've got some numbers coming out of the States. You've got the symposium. This is all in the next 48 hours. We had China yesterday, and they released some numbers as far as, well, not numbers, but stimulus and what they were going to do as far as prime rates, and underwhelmed to the 5 basis points. What does that do? So they've got a property sector there that's imploding.
Yes.
So there's a lot going on, and there's a lot going on with energy and what's happening as far as gas, natural gas back at nearly $10 a metric unit. So it's a fun time to be in these markets.
Yeah. So there's plenty of negativity out there.
Yep.
But,
and excitement.
It is, and the markets, sometimes they can prove to be fairly resilient, but I suspect the next sort of probably 3-4 weeks will give us a fairly good insight as to how we're going to play out the rest of the year.
Yeah, it's going to be showtime.
It certainly is.
Yeah, right, strap ourselves in.
Excellent. Well, thanks for your time again.
Good to see you, Andrew.
We'll group again next week.
I look forward to it.
Once again, thanks for joining us. That's the XM.com weekly market update on Boardroom Media.